Imagine if investors could almost predict the future of the stock market like they had a superpower. But here's the twist. It's not magic. It's AI. AI is changing the way we look at stock predictions by sifting through huge amounts of data and spotting patterns no human ever could. But can AI really tell us where the market is headed? Could it even help us see the next big market change before it happens? In this video, we're going to break down how AI is shaking up stock predictions and what it means for the future of investing. By the end, you'll see just how much AI might change the game for investors everywhere. To understand how AI can make predictions in the stock market, it's important first to know the basics of how AI works in this context. At its core, AI in the stock market is all about data. Tons of it. AI-powered systems gather and process vast amounts of information, including historical prices, social media sentiment, and economic indicators like employment rates and inflation levels. These are the kinds of data points that no single human could analyze quickly or without bias. But that's precisely where AI shines. AI can take in massive amounts of data and begin to find patterns within it that may suggest where the market is heading. It does this using machine learning algorithms, which are sets of rules that help the system learn from data and improve its predictions over time. Essentially, these algorithms look for relationships in the data and adjust themselves as new information comes in, getting smarter and more accurate. One popular type of machine learning used in stock prediction is neural networks, which are designed to mimic the way the human brain works by identifying hidden relationships between data points. For instance, if there's a surge in social media chatter about a particular stock, AI can analyze millions of tweets, articles, and forum posts to gauge public sentiment about that stock. This type of analysis provides a huge advantage over traditional methods, which can't process data on such a large scale or with the same level of detail. This ability to combine speed and depth of data has fundamentally changed the way analysts and investors approach stock predictions. Where traditional analysis might take days or weeks, AI can deliver insights in a fraction of the time, allowing investors to make more timely and potentially more profitable decisions. The applications of AI in the real world are already impressive and growing. Major companies and hedge funds, for instance, have been using AI to predict stock movements for years. Firms like BlackRock and Renaissance Technologies, two of the biggest names in finance, employ AI-driven software to analyze mountains of data every single day. This software doesn't just look at stock prices, it scans everything from social media mentions to news articles and even tracks how other stocks are performing. The goal is to identify patterns and make predictions about the stock market before the market itself has a chance to react. In some cases, AI systems can predict significant changes in the market hours or even days before they occur, giving investors who use these tools a major edge over those relying on traditional analysis. Take, for example, the 2020 stock market crash triggered by the COVID-19 pandemic. While it's impossible to predict a crisis like a global pandemic, with absolute certainty, some AI models did pick up on early warning signs. As online searches related to the pandemic increased rapidly, AI systems analyzing these patterns flagged potential concerns, indicating to investors that something big might be coming. Those who paid attention to these early warnings were able to adjust their portfolios and in many cases minimize their losses before the crash hit full force. While AI certainly isn't perfect, this example shows that it can provide early alerts that might not be obvious to the average investor. Hedge funds, in particular, have long understood that data-driven strategies can give them a competitive edge. However, AI takes these strategies to a whole new level. In traditional analysis, analysts might be able to handle a handful of variables at once, but AI can juggle hundreds, considering everything from global events to minute details like changes in trading volumes. In a fast-paced, information-dense market, this agility can be the difference between making or losing money. AI's ability to make connections across seemingly unrelated data sets allows it to find opportunities or risks that human analysts might overlook. For instance, if a certain stock has consistently performed well whenever oil prices drop, AI could catch this correlation and use it to predict future performance under similar circumstances. The benefits of AI in stock market forecasting are hard to ignore. The speed with which AI processes information allows it to analyze vast amounts of data in seconds, something a human analyst could take days or even weeks to do. This can make AI predictions faster and often more accurate. Additionally, because it's a machine, AI doesn't suffer from the emotional biases that usually cloud human judgment. Investors can get nervous, anxious, or overconfident, which can lead to impulsive and sometimes irrational decisions. AI, however, bases its predictions solely on data, making it less likely to fall into these traps. This objectivity is one of AI's greatest strengths, as it helps in making more logical, data-driven investment decisions that aren't swayed by emotions. But it's essential to understand that AI is not a magic solution. The stock market is influenced by countless unpredictable factors, from political events to natural disasters, and no algorithm can account for everything. AI is incredibly effective at spotting patterns, but these patterns don't always hold in the face of unexpected events. For example, an AI model might predict that a particular stock is going to rise based on historical trends and current data, but if a sudden global event disrupts the market, those predictions can quickly become irrelevant. This unpredictability is one of the main limitations of using AI in stock market forecasting. Furthermore, there's an ethical dimension to consider. If AI can give some investors a significant advantage over others, it raises questions about fairness in the stock market. Should all investors have access to these AI-driven insights, or will only the wealthiest firms be able to benefit? This disparity could lead to a future where only those with the resources to develop and access advanced AI tools succeed in the market. As AI becomes more integrated into finance, we may need to consider new regulations to ensure that the playing field remains level for all investors. AI is undoubtedly changing the landscape of stock market prediction. From making sense of millions of data points in real time to providing investors with insights that can inform their decisions, AI offers a powerful tool that is reshaping the way we think about finance. However, while AI-driven predictions can be quick and often accurate, the unpredictability of the market and the ethical considerations around AI's use cannot be ignored. We're still at the beginning of AI's journey in the financial world, and as the technology continues to develop, we'll likely see even more advanced applications. Whether that means AI will one day be able to predict the stock market with near-perfect accuracy remains to be seen, but one thing is certain. AI has already had a profound impact on the way we view and interact with financial markets. As we look to the future, it's worth considering what the next phase of AI's evolution in finance might look like. Could AI get even better at predicting market trends, or will the stock market remain too volatile for even the most advanced algorithms to predict accurately? Perhaps AI will move beyond prediction into actively managing portfolios without human intervention. Or maybe it will focus more on risk management, helping investors avoid losses rather than chase profits. Whatever the future holds, AI will undoubtedly play a significant role in shaping it. If you're curious about what's next for AI and finance, make sure to subscribe to our channel for more insights and updates. And if you found this video helpful, give it a thumbs up and share your thoughts in the comments below.